we are at the end of April 2025, and I just wanted to show you a recap of how my portfolio performed in the past month. So, since the beginning of April, um, the joke day, April 1st, I am up almost 8%, which is pretty nice. Of course, due to Liberation Day and all of the fears about tariffs, there has been quite a significant fall in my portfolio, just like I'm sure has happened to everyone. As you can see, uh, here's really where the big fall started for me. Um, but I have continuously kept adding cash to it, as you can see in these little increments here, and overall ended up at a strong position. Also, uh, since the beginning of the year, my gains are the same at roughly 8%, which shows you that this month not just undid the damage of the Trump tariffs, as you can see here, the gray line, invested capital, is almost $9,000 above the portfolio value towards the end of January. And by the time we come to the beginning of April, um, my invested capital is actually $1,000 above, or $500 above my portfolio value, meaning that I lost money on my investments. But as we can see, as we come back here, the gap again widens between invested capital and portfolio value, finally coming to almost four and a half, no, $5,000 apart. So that is quite nice. Um, Now, of course, I do realize that the volatile times will continue. I mean, Trump is in office, and who knows what he'll do or say next. Um, However, I am cautiously optimistic. I'm trying to diversify more into international markets, so diversifying away from the US. And this is not necessarily just because of geographical reasons, but I also want to diversify the underlying currency. Because when you're heavily invested in US companies, the asset prices, the equities will always be tied to the US dollar. Um, but the US dollar has lost a ton of value compared to the euro. And by getting more into, for example, the eurozone, I at least get to diversify my dollar portfolio with euros. So here we can see still heavily vested in North America. This, and then Europe is 3%. Other is probably a mix of everywhere. Interesting that they list the UK as separate. But yeah, my main holdings are SCHD, Nvidia, SCHG, and I am currently adding more to ASML. I have to. I just know too much about that industry. Um, I got a little bit more Siemens, because why not? A little bit of Barclays as well. I do believe that in the near future, uh, it will recover, but mainly in SCHY, which is pretty promising, as well as WeYMI, as you can see here. So WeYMI is pretty nicely diversified. I mean, the returns are lackluster, but when you look at the beginning of the year, it went up quite quickly. Um, and it has a nice dividend distribution as well, as you can see here, with mild growth, but definitely expected to have it grow some more. But then when we look at SCHY, I am actually quite optimistic about it being able to grow its dividends sustainably. So that is how I'm hedging against all of this geopolitical tension as well as just market uncertainty. But I'm still heavily invested in Nvidia, which, by the way, might seem great. However, I'm trying to diversify away from it, not by selling, but by buying other assets. And yeah, technology clearly is an overweight here, which is fine because I'm young enough for those fluctuations to even out at least in a decade. But still, that's 38%. And then semiconductors as an industry, almost 25%. But yeah, I'm sitting on a little bit of cash. Have very minimal amount of crypto, 1%. That really isn't too much, I guess. But yeah, as you can see, US, 87%. I don't know what other is. I can't, yeah, I can't lie. And yeah, as you can see, 97% invested in the US dollar. So when the US dollar slid by almost 10% since the beginning of the year, that means that even though the number go up, it's 10% worthless. So let's say if it went up by 5%, but then the dollar itself loses 10% of its value, that kind of means that I lost 6-ish% in overall value. And then 0.5% in the British pound sterling. Not great. See, euro, that's a nice currency to be in. I think it will further strengthen. I think the European Union will actively try to weaken the euro a little bit, just so that they can also make their trade a bit more attractive. But so far, I think my overall idea and my hope for March is that I can continue diversifying away from the US and from tech. But then when we look at the dividend stats, those are pretty promising for the year. And I kind of have to do this as well, simply because it is a milestone. In 2025 right now, I'm almost at $1,500 of dividends. And especially in December, it's going to be a bit over double of what I received in March, at least the forecasted. But yeah, I'm having a great time playing around with this tool. I think it's pretty cool. And yeah, as you can see, I'm pretty unbothered by most of these market fluctuations, specifically because I am also personally sitting on a lot of different types of cash reserves. So when I see things on sale, I tend to overbuy a bit. I love a good deal. But yeah, I'd say that with the dividends especially, um, I mean with the forecast, I wouldn't necessarily believe in this one too much just because my behavior has been very different. So in um, yeah, as you can see here, and this is super exponential growth because from 2020 to 2021 it goes down a bit, it doubles, then what? It goes up um, I don't know, almost 20%. I mean, sorry, 15 times ish, roughly. And then almost 20 times. Uh, so, yeah, and we're still at the beginning of the year. So I expect this to go up. The goal would maybe be seeing it at 2000, just because psychologically as well, it is calming knowing that even though you are throwing money at depreciating assets, temporarily depreciating assets, are still increasing the dividends you're getting paid. So even though this line could potentially go down, um, yeah, even though that line can maybe go down, at least I see this bar chart, that value go up. And I also like to look at this because March should pretty much be equivalent to the um, to June for most intents and purposes, or definitely equivalent to September and December. And as we can see, I mean, there's a doubling already here. I want this to be 500 for illogical, I guess, psychological reasons. Um, but yeah, I think so far so good with the performance and the dividends. And I can, of course, also look at it as a calendar. By the way, Apollo Group, I love them. Main Street Capital looks like it's forecasted to uh, decrease its dividends at some point. But again, I mean, this is a forecast. I don't know how much. I believe the GetQuinn forecasters regarding this. I know that Main Street should continuously go up, and they're pretty adamant about being the only monthly dividend payer that also increases in value more. Now, Aries, I don't know. I kind of bought it on a whim, lost a good amount. Thankfully, I bought very little of it. But then when it comes to SCHD, as you can see, in September, it's going to be paying $204, and in December, almost 215, even without adding further shares. So that is quite fascinating. Now let's look at Barclays that I bought on a whim. I bought 10 shares at roughly 15, so $150. And it's going to pay one dividend of almost $1.50. Of course, depending on the exchange rate, simply because Barclays is a British company, so it should be paying in pounds. Mm, yeah, but so far, happy with the month. Today, especially, was quite interesting when, when you look at how we came off from positive after hours all the way into the negatives during regular New York trading sessions, and then went all the way into positives. Of course, not as much as, again, the major winners like Microsoft and Meta, but it still is a win. So yeah, I am aiming to make a monthly review like this. Um, so see you all at the end of May.